What you don't know about depreciation is causing you to pay more than your fair share in taxes. Each and every year, you have this huge tax liability, and it's because of what you're missing in regards to when it comes to depreciation. So today, let's talk about the top 3 depreciation expenses that you want to make sure that your tax preparer, your accountant, is taking on behalf of your business. It should be showing on your business's tax return. The first depreciation strategy is going to be depreciation of any buildings that your assisted living facility owns or any buildings that your childcare facility owns. And yes, this goes for not just buildings, but any type of real estate properties, investment properties that the businesses own as well. Depreciation needs to be taken. This type of depreciation, you can depreciate for a very, very long time. And if it's not being taken, so many times we do second looks at businesses' tax returns that they have gotten prepared by former tax professionals, and depreciation for the buildings that you're paying mortgages on or the real estate property that you're paying on, the depreciation is not being taken. And this is a missed business expense. Depreciation is a business expense, and it's missed on so many tax returns that come across our table. So you want to be proactive and make sure that, number one, your tax preparer is actually going over your tax returns with you. Okay, that's really and truly how you're going to catch this. And you need to ask questions about, is the building expense depreciation being taken on the buildings that I own, the real estate that I own? Can you show me where depreciation is being taken on my tax return, just so that you as the business owner can be at peace knowing that these things are being taken and that you're not paying more than your fair share in taxes when it comes to depreciation. The second depreciation expense that I often see overlooked are the business's assets that you're capitalizing or that you should be capitalizing in your bookkeeping, such as business equipment, business vehicles. Is a big thing, not just your 15-passenger van, but let's just say that you as the business owner, you sometimes use your personal vehicle to run errands and things like that. It's often been stated that education is so important. We get clients that come to us and they inform us, hey, I thought that I could not depreciate my personal vehicle from a business standpoint, and you really can. It's just calculations that you have to do in regards to what percentage of your personal vehicle did you use for business purposes, and you get to prorate that. And the part that you use for business purposes, you are able to take depreciation on. And these are things that are missed, and this is how you end up paying more than your fair share in taxes. So make sure, not only, like I said, that the mortgage is being depreciated, the buildings are being depreciated, but make sure that your fixed assets are being accounted for on your tax returns this year, to make sure that those vehicles are being depreciated the way that they're supposed to be depreciated over their fixed assets life. And a lot of times we find out, unfortunately, yes, some accountants are lazy because it takes work. It takes work to depreciate all of these assets. Let's just say, for example, a company has 15, 20 buildings, and because we have a client who has 15 to 20 buildings, and they have like a fleet of vehicles, maybe 45 vehicles, okay, for their business. So yes, each and every one of these fixed assets have to be depreciated over their fixed asset useful life, and it has to be kept up with every single month. So yes, it is a lot of work, but that's why you want to make sure that whatever accountant that you have for your company, that they're working for you and not for the IRS. And yes, it takes time. The third depreciation strategy I often see overlooked are things such as the office supplies within you guys' businesses, such as it could be industrial printers, it could be industrial copiers and copy machines and things like that. These huge different, big assets, office supplies that you use in your business, they're often being left off of the business tax return. And you can be in a childcare facility or an assisted living facility running multiple facilities and have these industrial printers that you're paying $5 to $10,000 for the year, and they're not being depreciated. They're not being capitalized on your business tax return, which again is causing you to pay, the business owner, you're paying more than your fair share in taxes when you don't have to. So these are very important questions that, as the tax season is upon us, that you want to start writing down, gathering these things to make sure that whomever is preparing your tax returns is making sure that you are getting all your business expenses and getting all your business deductions, because again, no one wants to make 6-7 figures for the year and then have to turn around and pay a 6-figure IRS check to the IRS, right? We don't want to do that. So hopefully these things help you in regards to preparing for the upcoming tax season that is going to begin on January the 29th. If you are a child care provider, or if you are an assisted living provider and you are just having trouble with depreciation and not knowing if the depreciation is being captured on your business tax return, or not even knowing if the depreciation is being captured correctly within your bookkeeping, because that's where depreciation starts. It starts within your bookkeeping. It starts within your depreciation asset scheduling that's supposed to be done during the year with your monthly accounting. So if you're all over the fence about that and you just don't know if things are being properly done, and you just, a year after year, you're getting these huge tax liability bills, click the link below this video. Myself or one of my staff members will reach out to you, we'll book a consultation with you, and we'll assess your situation to get you on the right track. So this year, we're not going to pay the IRS more than our fair share in taxes. We're going to leverage the IRS code, and we are going to make sure that we're saving on taxes. I look forward to speaking with you guys soon.